The day began quietly enough on Wall Street. Market participants largely expected volatility, with the tech sector showing some weakness as traders trimmed their positions after weeks of strong gains. By mid-afternoon, the mood had grown more cautious. The Dow dipped throughout the day, eventually finishing down 211 points, or about 0.5%. So let's talk about Nvidia. The company designs and sells the most sought-after chips, known as GPUs, used in data centers and to power AI applications. In 2023, Nvidia's revenues soared as nearly every company with designs on leading the AI race rushed to buy its products. The company became a proxy not merely for the fortunes of a single business, but for the future of the technology industry at large. As Wednesday wore on, investors were asking, has Nvidia's meteoric growth continued? Were its chips still in sky-high demand? Or was there evidence that the AI gold rush has started to cool? This uncertainty rippled through the market. Investors are always forward-looking, and when expectations are sky-high, even a strong report can disappoint if it doesn't exceed what people already hoped for. That's what leads to volatility. Some traders sold shares to lock in recent profits, uncertain if Nvidia's earnings would justify its rich valuation. But Nvidia wasn't the only story affecting the market. Treasury yields ticked higher again on Wednesday as traders processed new economic data suggesting the U.S. economy remains resilient. Higher yields can weigh on stocks, especially those of fast-growing tech firms whose valuations hinge on future profit growth. During the trading session, viewers watching live updates saw stocks turn lower, with notable movement in Nvidia and other major tech names. Analysts and pundits speculated on what Nvidia's results might show, often returning to the same questions. Would demand for AI hardware keep exploding? Would Nvidia's guidance for the coming months be rosy enough to keep the momentum going? As the closing bell approached, trading volumes picked up, a sign that both individual and institutional investors were positioning themselves for after-hours surprises. In live broadcasts and on market tickers, the focus zeroed in on every hint and rumor about Nvidia's numbers. By day's end, the Dow's fall of over 200 points marked a reminder of just how interconnected today's markets are. Nvidia's earnings, a singular event from a company relatively few consumers interact with directly, held the power to move trillions of dollars in value. It also highlighted how sometimes markets react less to what has happened and more to what they think might happen next, even if only for a few hours. For investors, Wednesday's action served as a lesson in both the promise and peril of a market driven by a handful of enormous companies, and in the ever-present tension between lofty expectations and the hard numbers that follow. As the dust settles, attention now turns to Nvidia's actual earnings and to what comes next for the stock market as a whole, reminding us yet again that in finance, anticipation is often half the story.